Hello all and welcome to RiskScout's webinar, New Nacha Rules in Practice, what we have learned so far. We are so excited to have you all joining us here today. Now, before we do dive into today's webinar content, let's run through some quick housekeeping items. RiskScout will be sharing all of today's webinar resources in a follow-up email first thing tomorrow morning, so be sure to keep an eye on your inbox. You can access all of today's webinar resources, including a copy of this slide deck in the top right corner of your webinar interface. We also would like this session to be as valuable for you as possible, so we encourage you to ask any questions that you may have throughout today's session in our Q&A portion at the end of the webinar. We'll also be running a few polls throughout today's session to help better understand you all, our audience, so your participation is greatly appreciated. Thank you all in advance. Now, in case it is your first time joining us here today, RiskScout is a team of BSA professionals and former bank examiners, helping financial institutions prevent fraud losses and protect their communities while improving profitability. We've built the platform we wished we had to fight financial crime, focusing on reducing manual work, unlocking new deposit streams, and ensuring regulatory compliance, all without needing to increase headcount. By leveraging our deep industry expertise, seamless data integrations, and intelligent automations, our comprehensive BSA, AML, and fraud platform empowers bankers to do more with less so you can focus on serving your community. If you're interested in learning more, visit RiskScout.com and get in touch. We'd love to hear from you. Check fraud is rising, and your tools might not be keeping up. To celebrate 1 full year of partnership, we're teaming up with MyTech Systems to show what innovative, integrated fraud detection looks like. MyTech analyzes over 20 attributes of every check image against a consortium of verified checks across financial institutions nationwide to find inconsistencies and bad actors. When fraud is detected, it escalates directly to a case inside of RiskScout, where your team can contact the customer or member and resolve that issue directly without ever having to leave the platform. We'll cover what's driving the surge in check fraud, where legacy tools are falling short, and give you a live look at how the RiskScout and MyTech integration works end to end. Visit RiskScout.com to save your seat today, or you can click the link that's being posted in our chat box right now. We hope to see you there. Today's webinar will be led by Ryan McInerney, RiskScout's Chief Product Officer. Ryan leverages his extensive regulatory and technical background to create software solutions that solve critical industry problems. Before joining RiskScout, Ryan served as a national bank examiner at the OCC, where he was a key member of the Northeast District Committees for Compliance and Commercial Credit, working to address challenges facing community banks. He has spent a significant time working with our customers to build intuitive, effective, and compliant Nacha solutions over these past 8 months, and is an accredited payments risk professional from Nacha. We are so excited to have him joining us today to share some of his thoughts and expertise. And Ryan, without further ado, I will go ahead and pass the baton over to you to dive into today's content. Take it away.
All right. So thanks everybody for joining us today. Excited to talk a little bit about what's happening for Nacha, what we're looking at for solutions on the ACH monitoring side, and then just a little about the scenario and kind of why some of these changes are happening in the first place. So starting off with by the numbers, we've got a couple of different stats in here. A lot of these are going to be based off either Nacha statistics or the IC3 crime report. This first piece, we're just looking at the volume of ACH that's actually been occurring. And so when we look at same day ACH movement in 2025, Nacha published that at about 3.9 trillion. So that is up 17% in volume, which is pretty significant for a year-over-year change. And it's a lot of payments, and we're also looking at a faster settlement window with that. So more volume, quicker turnaround time, not usually the ideal situation for risk management and monitoring, but it is what it is. We're seeing that change, and so it's good to know that it's happening. In terms of fraud overall, the IC3 report, we saw about 21 billion in fraud losses in 2025. And so that's up 26% year over year. I think we're seeing a lot of different fraud scenarios that are coming through. Some of those are what we're used to. Some of them might be a little bit new. But one thing to think about there, and I think is pretty relevant, is that last bullet there, which is the 7.7 billion lost to victims over the age of 60. When we look at community financial institutions or traditional financial institutions in general, that really is the hub for that demographic, that group. And so there's a lot of losses stemming from that that are being captured in this total loss framework or this total loss metric. And so it's good for us to know that so many of our customers are being affected by that and how much that represents the total breadth of fraud. And then lastly, where are those different types of losses? First, I think one of the most interesting ones here is business email compromise. But when we were putting this together, I did not expect investment fraud to be as high as it is. So any of these, whether it's business email compromise, which I think is the most, from a name perspective, recognizable for financial institutions, investment fraud, tech, customer support, data breach, a lot of that money still ends up transferring into the financial system, whether that's coming into traditional financial institutions or maybe elsewhere. So it is still something that we can keep an eye out for. There are different ways to look for those different items. So it's just good to know these are kind of those starting points.
Okay. All right. Now, before we get too deep into what all is changing with these new Nacha rules, we do have our first poll question. And for those of you that have been attending RiskScout webinars for a little bit, you might recognize this question because it's the same one that we asked on our first Nacha webinar back in December. You should see the screen or question popping up on your screen. We're asking how your institution understands these upcoming rules. For reference, we rewind the clock back to December. 63% of our respondents on that call said that they were not very confident. So under that somewhat confident rate about the rules that were coming down the pipe. Now, 7 months later, interested to see how much that's changed and who on our call we have with different confidence levels. So we'll give y'all just a couple more seconds to get these responses in, and then it'll be interesting to see how it stacked up, what's changed. Excellent. Thank you. Y'all are quick on the draw today. Should see those results turning around here. And it looks like, fortunately, we're feeling a bit more confident today than we were back in December. So 43% of our folks are feeling somewhat confident, 25% feeling very confident, which is excellent. Only about 30% of the folks are not confident or kind of in that it depends wavering. And there is nobody in the not at all section, which is excellent. I know that was one of our top results back in December. So I'm grateful to hear that we're feeling a little bit better. Ryan, how does this stack up to what you were expecting to see today?
Yeah, I really was expecting the majority of people to be in that somewhat / it depends category, especially where we're looking at a lot of vendors or just internal processes that institutions are deploying. They might not be fully built out. There might be some scenarios that are covered and others that are still occurring. You might still be trying to determine what are the things that you want to be identifying, what are the things you want to be picking apart, how much staff do you have to put into this. So as we continue to grow in this and we do more with it, I think we'll get more into that very confident stage, but we're looking at a new requirement and just building that out. So somewhat confident, it depends. I think that makes the most sense.
Excellent. Thanks all for that. And let's dive into what exactly is changing.
All right. So on the changes overview, we have the formatting changes to entries just to help with some of the fraud detection performance. Also coming up in September, some of those IAT changes that make it a little bit easier for us to find IAT transactions. But those entry changes, I think that's one of the simpler things that we're doing here. And then the second piece is the FIs deploying risk-based processes and procedures. That's the biggest change here, especially when we're looking at that on the RDFI side. And so we're going to dig more into that, what we want to actually be doing here. Okay, so we are live on phase 2. That's going to be occurring June 22nd. In practice, that's really June 19th, given there's the weekend and the holiday. So June 22nd is when this is actually live, and that is for receivers, all receivers. That's for originators, all originators. Any of the volume thresholds that we had prior to this, those are done. So this is going live for everybody. And so if you do have a solution or if you don't have a solution, just make sure that you're doing something, whether that's manual or a vendor. So starting off on the receiver side, what are we actually required here? Well, it requires active ongoing monitoring of incoming credits. And so the way we can be doing that is a risk-based approach. And so what kind of customers do you have? What kind of members do you have? What should we be looking at for them specifically? We have one scenario, for example, that is looking for ACH on dormant accounts. Now, if you have a low volume program, that might be something that you want to turn on. If you have a high volume program, that might be something that you don't necessarily want to turn on, or you want to bound with some sort of lower dollar threshold so that you're not getting a notification every single time that's happening. Depending on what the size and complexity of your institution is, that really is going to influence what kind of scenarios, what kind of things you're doing to monitor the receiver side. It does not require pre-posting approval of credits, so you don't have to do this before you post. And it's also not shifting liability from the ODFI side. So ODFI originators, they still are really the primary liable party here, but you do have requirements on the receiver side. So for typology, some of the things that we're looking at, let's start with account profiling. I think it's really important to take the different types of accounts you have and break them up into different sections. So like some of the things we might look at would be, does this person have common counterparties? Do they have varied counterparties? Is the account dormant? Is it active? Does it usually transact internationally? Does it not usually transact internationally? Getting that profile in to then inform the scenarios you're looking for is really going to reduce the false positives. It's also going to make it easier for you to scope some of this analysis to the appropriate accounts. Abnormal SEC codes, we're going to talk about that on the receiver side as well as on the originator side. But typically what we're looking at there, PPD in a business account is one of the perfect examples, but you're looking for abnormal representation of that code for the type of account that it would be going into. That's typically going to be a red flag that maybe somebody is kind of new to the fraud side, or maybe they're trying to sneak one over. That's just a good one to look out for. Outside of abnormal SEC codes, there's also an approach where you can look at the distribution of SEC codes that you would have for either an originator or a receiver. And if that starts to drift into something that might not make as much sense, could be worth taking a look at. But again, it's how complex is your scenario? Do you really need to do that? Abnormal payroll, IRS activity. This could be the IRS. It could also be other government providers that are giving money to somebody. But looking for multiple payments coming into an account, that's typically indicative of potential fraud. We saw that a lot with PPP back in the day. And then mule funnel behavior. So are there a lot of names going into one account? Is there a fan out of payments going out to a bunch of different people that typically wouldn't have been happening? So those are both things to think about on the counterparty side and just representative side. All right, I said a lot there. On the originators, it's the same thing, risk-based processes. You want to monitor all of the ACH credits. That does include on-us credits, so those still count. And then you also want to have an annual review of your procedures. Again, this is a risk-based approach relative to the size, volume, complexity of your program. And it does not require you actually to screen every transaction individually, and it doesn't require you to screen prior to processing, but you should be screening these things. And whether we're doing that on a portfolio basis or maybe on an account basis, those distribution analyses might be something you can do there again on the SEC codes, all things you can look at on the originator side. Okay. We talked a little bit about profiling already. We're doing that same profiling, whether it's originator or receiver, just potentially looking for slightly different things, right? On the receiver side, we're looking at them being the beneficiary. On the originator side, we're looking for the beneficiaries they might be sending to. Suspicious company entry descriptions are a good one. Specifically on micro entries, there's going to be a standard description you're going to see around micro entry. Someone that might be mimicking a micro entry could potentially have a different description in there. I guess that would be on the transaction description, not the company description, but still relevant. Changes to the payroll batches are going to be pretty indicative of potential fraud, but it could also be somebody that's just in a growing company. So that one, Could be beneficial, could not be beneficial. I think, again, depends on how many individuals you have in this origination program, because if you have a lot of payroll that you're managing, they could get a bit noisy. And then return rate monitoring, if those rates are starting to creep up, or maybe the codes are starting to get a bit more indicative of something weird going on, that is going to be a really relevant indicator. Okay, so a lot of these myths, these are things that we've heard to this point. You don't have to approve every ACH credit before a post. The rule is not shifting fraud liability to the receiving bank, but it does create responsibilities for the receiving bank. And then lastly, every transaction must be screened in real time. That is not something that's happening. I think when we read the original notice proposed rulemaking, we kind of thought that was where they were going. But when you started to see the feedback and the follow-ons that were coming after that, then they removed that requirement of real time. And so we do see people doing that in batch. We do see people doing that in different ways.
I believe that takes us to our next poll question here. So now that we've kind of talked through what exactly is changing, we want to know what you're feeling about these changes. So are there specific scenarios or typologies that you're most concerned about monitoring with the rollout of these new rules taking effect for everybody on Monday? Right, just around the corner. Got a couple options here. Maybe it's that beneficiary information, beneficial owners, the receiving or sending country info, abnormal transaction amounts. It's going to always be a bit tricky. And what are those thresholds supposed to look like? Name mismatches, or maybe it's something else entirely that Ryan walked through or that we haven't even touched on yet. Give you all just a couple more seconds to get your answers in here on what those things are that you're most concerned about catching over the coming months. Excellent. Thank you all for getting those answers in. Looks like we've actually got a decently even spread here. Name mismatches definitely coming in first place, but abnormal transaction amounts not too far behind. Over a quarter of our audience is definitely concerned about monitoring those. 12% of folks are concerned about that beneficiary information, 9% for that country info, and then another 9% on other. Ryan, I know you've been building these scenarios and tools yourself, working with bankers directly to already monitor those for the folks that went live back in March. How does this compare to what you expected?
Yeah, this is completely representative of what we've been hearing. I think the number one thing that we hear about is name mismatch. I think that's kind of a little bit different than what people have been having to do in the past. And so there's some concern about doing it now. And then on the name mismatch, there's a lot of areas where if it's done incorrectly, it's just going to be really noisy. Like, let's say, for example, we have somebody with multiple names that are associated to their account, but maybe only one of those is actually on the account. Now, every time that incorrect one comes in, you're getting that false positive, and volume like that is going to be super inconvenient, especially if you can't batch status it or batch dismiss those. And I think it's funny on the beneficiary information compared to name mismatch. Beneficiary information is really going to be on the outgoing side, name mismatch primarily on the incoming side. But that beneficiary one still makes sense, particularly if someone's trying to change like an account number for a beneficiary or trying to sneak somebody into a payroll batch.
Well said.
Last one on the abnormal transaction amounts. I know that's the amount, but it's just as important to think about count velocity. So I know we don't have that on here, but amount is just as important as maybe somebody sending a ton of transactions rather than one large one.
Excellent. Well, I know in order to monitor any of these, you have to have data. So Ryan, let's talk about that data and how to go about getting it.
I know nobody actually wants to talk about the data, but I like to talk about the data. So we'll run through that. I do think just on the flow in general, it can feel like there's a little bit more leniency on the receiver side, just because that analysis can occur as entries come in. You can do it prior or posting. So that's totally up to you how you want to go about that. I think if you have an API that can make that a little bit easier to do it prior, but if you don't, there's still time for you to do this and work within the settlement period. And then on the originator side, you're going to be choosing between a lot of these different options on real time or batch. It is slightly higher stakes just because you are the responsible party for the transaction. And once the transaction is out, you aren't really in control of those funds, even if you make that request out. So just some thoughts on the perspective on either side of those transactions. Now, the conversation I have with potential customers, with current customers, is really about what type of monitoring you want to be doing. And so we put these into levels. We said level 1, 2, 3. Level 1 being you have an API, and the API is providing a per transaction flow into RiskScout or to whatever your provider might be. And then with that, it's then, can the provider respond back to that API? So some APIs allow for us to respond back, some might not. So even if you're getting the transactions in and you're able to identify that potential fraud scenario, is your system able to respond back, or do you have to go do that manually? So even if you're doing the API side, it's still worth knowing whether or not you need to interdict that manually. And then past that, the intraday versus nightly batch files. Intraday would be if you can provide batch files, say every hour, every 30 minutes, every 2 hours, whatever it is. If you give those to a provider or you're doing it manually, can the analysis be performed right when that comes in? And if so, that's one way to try and get this stuff reviewed prior to processing windows. Nightly batch, the slowest, but it's still good for pattern recognition. It still is something, you're still doing something there. So in some cases, nightly batch still makes sense, especially if you have a lower volume program. So these are really like the 3 categories people end up in. And I think it's really worth a conversation at your institution about which one makes the most sense for you. We'll dig more into this as we go farther into the slides, but it's a big decision and it really impacts how the entire program is built.
Hey, Ryan, had a couple questions already come in around this. Who should be a part of that conversation? Is that something that I'm just doing with my compliance back office? Should I be talking to IT? Should I be talking to my core? Who are all the stakeholders in choosing these levels?
Yes. So IT for sure, they're going to have a good idea of what you're already getting. That might also require a conversation with the core, depending on who your core is. Maybe that's a conversation that can happen sooner, or it's one that you'd have to wait on. So IT is the starting point, and eventually they pull in the core. Obviously, we are a BSA AML software as our starting point, and then with the fraud pieces and everything else. But the primary user of the software ends up being the BSA team, the compliance team, the fraud team, and that's not the operations team. And so the operations team is going to be really important to have in these conversations because they're typically the ones that are managing these payments and this flow. So at least making sure you're bringing the ops team in here. This isn't really something that just lives on the BSA fraud side of the house. And then past that, if you need some sort of executive sponsorship or if there's some sort of committee that this would make sense to go to in your institution, I would definitely bring it up to that level. But at a bare minimum, BSA, compliance, fraud, operations, IT. Okay. Trying to get the data real time can be relatively expensive. And if you have low volume or potentially you don't have the staff to handle alerts that would be coming in at the volume that they would be, right? When we get a transaction, we're going to run that transaction through the fraud system, get a result out within a second. So if you have that with every transaction that's coming into your institution, are you going to be able to handle the volume of alerts that then comes with that? Or do you have the time, say schedule wise, to actually handle those when they come in? Maybe you can handle the volume, but you can't handle the timing. So those are all something you should consider when you're thinking about the API side. In some cases, you might be technologically prohibited from getting that information. For example, we use raw Nacha files for this sort of stuff. Sometimes people can't get that raw Nacha file. And then it's a matter of, okay, well, how do I create kind of this version that might be in CSV or something else? And that can be a little bit more difficult. And then lastly, if you have really low volume or really low risk, maybe there's something you should be doing manually because it's not worth the hassle that you would potentially have to go through to even get the data from your core. Okay, so there have been some learnings here. This one, I think we kind of all already knew. Nacha does have fines up to $500,000 a month for egregious violations. Now, personally, in Ryan's opinion, do I think that there would be egregious violations for kind of slowly ramping into this or missing some things in the beginning piece of this? I don't, but that is the worst case scenario. And then audits, corrective actions, the reputation risk, suspension of ACH services, those are all scary things. I think if you are going through your best efforts to implement this, review the transactions that are coming in and coming out of your financial institution, you're going to be in a good spot here. Just work towards the program, continue to try and enhance your program, and I don't think you'll be dealing with these things. So key stumbling blocks, the first one of those is definitely going to be getting the proper files from the core for monitoring. I think we've seen some challenge with getting the raw files from different places. That can be a little frustrating for the financial institution. Sometimes it's not coming from the core. Sometimes it's coming from a payment processor or somewhere else. So it's good to know where you should be getting that data and look at the different places you would be able to get it from. That's probably a conversation with the data side or the IT side of your institution. Updating formatting to fit the new requirements. Really what I'm talking about there is on Nacha transactions, the representation of those, the ACH transactions themselves, is just going to be missing certain information if you try and take it out of what would be like a normal table. And so it can be difficult to format that to make sure you get all the information out of it when it's not coming from the raw file. So just keep that in mind. It could be a little bit of a arduous process to get the information you need. And then lastly, limitations on those files might limit what you're able to actually look at, but that doesn't mean you're not able to still do analysis. It's just you might be missing certain pieces, so some of that analysis might be limited for you. It's what can you do with what you have available to you. What we've seen so far, receiver and originator side, those can be totally different setups. So when we think about the originator side, we're looking at transactions that are going out typically in a batch, and those will be from a company ID as opposed to from an account. So the file can be a little bit less descriptive of what's happening in that transaction. So sometimes we'll see institutions that get the originator file from one place and the receiver files from somewhere else. That's totally okay. They can still go into the same system. It's just something to know that those files can look a little bit different. And then staffing is a real constraint. If you're getting tons of alerts on this stuff and they're just flying in all day, you should be thinking about who can be looking at these when, what happens if you start to get inundated with them, what should you be tuning if you are getting inundated with them, all things that should go into the initial setup of this program. Okay. What good looks like, I believe, is kind of up to it's the eye of the beholder. So documented risk-based procedures, that's really going to be dependent on what you're doing. So those procedures for one institution might be 10 pages. Those procedures for another might be half a page. So remember, just keep this in scope of what you actually have for a program and exposure. Monitoring on incoming credits, not just originations, is one of the biggest changes in this entire program. Return rate tracking is going to be super helpful if you start to see return rates tick up. This really isn't, in my opinion, something new that we've been tracking, but it's something that's just kind of been a reminder that that is still it's a valuable metric. It's something we should be looking at for potential fraud on the originator side. Defined alert response path. Really what we're talking about here. So in your procedures, maybe it's a policy, who's looking at the alerts? When you find something, what are you doing about that? Are you going out to the processing system to stop it? Are you reaching out to another institution? What is the path that you have when you see that alert? And are you holding consistently to that response path? And lastly, review the procedures at least annually. That kind of goes without saying, in my opinion. If you're being reviewed by a regulator or an auditor, they're usually looking to make sure your policies and procedures stay in line with what your actual activity is. And so if your risk profile is changing, if your staffing's changing, if your software is changing, those are all going to be good reasons that you should be updating those policies or procedures. So make sure those stay in line with the actual activity you have.
Hey, Ryan, I'll actually jump in here real quick. We got a couple questions about maybe getting examples of policies and procedures to help people with this transition. Just a word of warning, you will be beholden to your policies and procedures. So while finding things online or getting help from, the institution down the street are always maybe good starting places or can help influence you, at the end of the day, your examiners will hold you liable for what you have in your own item. So a copy and paste job, we always kind of recommend a word of warning of making sure that it truly fits your own institution. And guidance is always helpful, but just a straight up, or using ChatGPT or something like that. At the end of the day, it's what your institution is going to be held to. So just a word of warning on that front. Ryan, anything you'd add to that?
I'd say on the procedures, the biggest things I'd be looking for as an examiner if I was coming in would be, how are you sourcing the information? Is there a consistent process for that? Is that included in the procedures? If it's totally automated, great. Is there a review process to make sure that's still working, say every 6 months or whatever is appropriate there? And then the other piece would be that second to last bullet, that alert response path. I'll show it when we do a brief demo of kind of how we're approaching this, but how are you tracking potential fraud scenarios? Are you able to do some reporting on that? If so, how are you able to do the reporting? Like all of those, that path, that documentation, those are the things that I'd want to see in the procedure side. And I don't want to get too prescriptive. I'm not going to say Ethan does this, Ryan does this, but maybe it's a certain role, or maybe it's a path that whoever is doing it would be going down that procedural path. That's the most important thing in my book. I think it's repetitive when I say it like that, but the path is the path. What are you doing with the alerts?
Well, Ryan, let's talk a little bit about what you've built out here at RiskScout.
All right. So some of the scenarios that we're looking at are SEC codes versus the account types, those mismatches that we talked about before. I think that's a really good one on the receiver side. Additionally, those name mismatch scenarios when we're looking at the name that's on the transaction coming in versus the account holder name. If you see differences there, that's typically worth some sort of analysis. It can be a little bit harder to tune in. So when you are starting off with something like that and you have like these fuzzy name matching or DBAs, all these different things, keep in mind that you need to make sure all of those are well represented in your data. Otherwise, you're going to get more false positives from it. Then we're doing a lot on the behavioral stuff. So is there an out of pattern amount that's coming in? And then are they going into are they coming from a high risk geography? On the originator side, we're looking at changes in account details. Is somebody snuck in and changed the account on somebody that was otherwise a known counterparty? Is it somebody new that's receiving the transaction that snuck into a payroll batch where that batch hasn't changed in the past two years, something like that? Sudden activity on dormant accounts, OFAC screening, and then lastly, on the geography again, we're always looking at the countries where things are coming from and going to, so you'll always see that on either side. Okay, so from here, I'm actually going to pull up the RiskScout software, give you guys a little bit of a behind the scenes look here as to how we're approaching it. And whether or not you're using us or you're doing something else, I'm hoping that this just can be a good example of ways to approach this. Maybe building your procedures off of this, thinking about that path. So take what you want out of it. I hope it's helpful. So starting off, this is the fraud portion of the RiskScout system. You're going to see all of the ACH transactions are going to be prepended by the letters ACH. And so if we go into any of these with this pending status, that's going to mean that they are situations where there is a scenario that's been flagged on it and we want to take a look at it. So let's look at this one here. And so on ACH 16, it looks like it is a web transaction. We have the originator, the beneficiaries, their account number, routing number. And so if we go into the scenario, we see there are two scenarios that triggered here. We have a new beneficiary. And so we know that this is an account that we want to see new beneficiary information on. So it means that they aren't having a lot of change in the beneficiaries they typically engage with. And then we see that it's ACH on a dormant account. So however we had configured this, they are dormant, might be 30 days, might be 60, 90. That's kind of up to the financial institution. And then is it above a certain threshold that we actually care about? And so in this case, is it over $500? Well, yes, it's $17,000. So that's a pretty aggressive change, in my opinion. From there, we move into the fraud tracking. So what's the type of fraud that this was? In this case, it's ACH fraud. What's the role of the account? In this case, the originator. If we already know the loss and we already know the recovery account, we put that in here. Probably don't know it at this stage, but we're going to come back and maybe update that tracking in the future. We'll also be tracking the prevented loss farther along, so we start to get into our case investigation. So let's say I do think this is fraud. I'm going to block it. Okay. And now that I've blocked that transaction, like you see, there's an interdiction section that was just added on here. And so if I had an API and I could respond back to the API, at that point when I block something, it should be going out and blocking it over there. In the majority of cases that I'm seeing where people are starting to implement this type of system and they are not using the API, there's a manual follow-up there because you're doing it with batch files. You have to go out, you have to go to the processing system. You might have to reach out to another institution. So in those cases, you're going to follow up with some sort of notes on the interdiction. If you're doing this manually or elsewhere, just make sure you have a way to follow up and keep that consistent across where it's, here was the fraud scenario, here's what I did. I can link those together. I can show the entire journey to somebody. So here I might be saying, this is exactly what I did to stop the transaction. I was successful or not successful. These are what some of the things I did to do that. And maybe I have additional follow-up that I need to do there. But that is the long and the short of the RiskScout side of things. I can run through some of the scenarios more in depth if people have questions, but that's what we're doing over here.
Hey, Ryan, we had a couple questions come through back when we were in our slides asking about the documentation side. Is that something that's all happening automatically? Is that easy for me to expose to my examiner when they come a knocking?
Documentation of the alert or documentation of policies, procedures?
I think documentation of the alert is what it sounds like. What happened, why I made that decision, and then maybe if I have a larger team, who made that decision.
Yep. Yeah, so when we look at the audit trail, well, I picked a bad example because we haven't done anything on that one yet. Let's go over here. If I look at the audit trail, you can see who's assigned, who's reassigned something. When I take notes on any of these, that's all shown on the audit trail in here. So there's a full log of everything that happens on each transaction that you could show to auditors and examiners on that.
Excellent. Thank you for that. All right. Well, I think we've got a poll question that should be popping up. Now that we've kind of seen an example of what an active Nacha compliant solution looks like for the back office, we'd like to hear where y'all stand. Do you have a compliant solution that's already in place? And if so, what does that look like? Maybe it's one that you already had existing. Maybe it's one that you went out and found, or maybe it's just covering an aspect, or maybe you're just not quite sure if what you have handy today does fit those compliance standards. So be curious to see what everybody says here as we give a couple more seconds to get our answers in. All right, let's turn those around. Fortunately, it looks like a lot of our folks either have an existing compliant solution in place or they've got at least some of those new rules covered. And then fortunately, we got a couple more there that have found a new tool to help them with that. Only 19% are not quite sure, with that final 4% saying no, not quite yet. Well, fortunately, you have until Monday, but all joking aside, Ryan did mention here, even if you don't have a software solution in place, that is something that you can start to do manually and see if that's something that you do want to pull a solution in to assist with entirely, or if that's something you can work with your existing provider to support. So hopefully that is helpful there. And let's go ahead and get back into our presentation.
Yeah, one comment just on this. I think it's the term compliant is kind of funny around this because there isn't any really stringent approach on what is correct and what's incorrect here. So it's really understanding what your risk is and making sure the scenarios that you're putting in place align with the risk that you're actually exposed to.
Excellent. Well said, Ryan. Let's wrap up here.
Okay. So next steps, if you don't already have a plan or solution in place, start with the manual side. If you're taking transactions down, reviewing them in a spreadsheet, or you have some sort of system where you're taking out these CSV files, or maybe you're looking at it, there is a way to review this information. Might not be the optimal approach, but it's at least a stopgap. Ensure policies, procedures, plans align with what you have for staffing. Get an idea of what the volume is going to look like, and make sure that if you have that sort of volume coming in, do you actually have people to work on it? And when you're doing that analysis, make sure you're incorporating the other responsibilities they have. I think it can be easy to say, oh, I've got 2 people, I've got X amount of hours here, but if they're in a different department, you don't know there are other obligations that can be a recipe for disaster. And on the data side, I'm always kind of reiterating the data side. If you haven't determined availability of the files you have, please start doing that. So determine if you can get raw Nacha files, determine if you have to get this via CSV. Are you going to use an API? If you want to use an API, where is it? Can people actually access it? So even if you haven't started with who your vendor is yet, start having these conversations about where the data is and how you're going to get access to it. But we did leave a bit of extra time here for questions. So I did want everyone to start thinking about those. When Ethan starts opening the floodgates, please let me know if you have any of those. We'll run through them.
Yeah, well said. And we've already gotten a whole bunch here, so definitely recommend those, even if we don't have time to answer them live on today's call, or if they're particularly in-depth and specific, we'll be sure to follow up with all of y'all. We do also want to call out, this is one resource that we have. We've got a lot of additional options here for you. So we mentioned earlier, we had a webinar back in December that Ryan was on, along with one of our colleagues, Kristen Parker, talking about the full gamut. So that not only covers what's rules are live today and are going live on Monday, but the rules that are happening in September and next year. So a little bit of a deeper dive there. We've got a full checklist that's in the downloads of today's webinar, and you can also find on RiskScout.com. We kind of recommend as a good guideline to go through your solution. And then also just a quick collateral piece about what we offer here at RiskScout, a little bit of what we saw and some quotes from customers that are using it today. So exciting stuff on that end. And I believe that does get us into the ultimate question. Ryan, I'll let you take this one here.
Yes. So we have enough of the scenarios covered here that it is considered a acceptable solution for Nacha. I try and refrain from using the word compliant because I don't think compliant is I think it makes it sound too harsh as to what you have to be doing. This is really a risk-based approach. You can turn on, you can turn off what you need to be doing. So we have the tools that you would need to be able to do that. And so yes, big yes.
All right, excellent. Well said. Well, let's go ahead and switch into questions. We have one final poll question that will be popping up on your screen now. This is just an opportunity to ask for RiskScout to get in touch with you after this webinar. If there's anything that you'd be interested in connecting with us about, whether that's Ryan or our team, etc., we're always here to help, Nacha and beyond. So if you'd like to follow up with us after today's call, this is a great opportunity to make sure that we touch base going forward. Excellent. I'll leave that up for a moment as we kind of get into questions here. Ryan, one that we had from our audience is asking about frequency. Should I be monitoring these kind of transactions on a daily basis, or is it okay to go weekly or monthly? Can you speak to that at all?
That's a good question. My vote would be more frequently than weekly or monthly. We haven't gotten a lot of feedback from examiners or people that would be looking at this yet about what kind of frequency would be acceptable in their eyes. But I know personally, if I was looking at this and it's more tailored towards the fraud side, I'd be more keen to look at it more frequently, especially when I'm trying to stop these specific transactions more so than I'm trying to stop like a pattern. And so if I'm looking at pattern-based analysis, then I'm typically looking back maybe a week, maybe farther. But even with that, if I'm doing, I guess you could do some of that pattern stuff weekly, but majority I would probably suggest doing it at least daily.
Excellent. Hope that's helpful to all that asked that question. We had somebody that mentioned they have a BaaS relationship, banking as a service. They said that their bank doesn't originate many payments themselves, but their BaaS partner does. Who's responsible for getting a solution, and how would you kind of recommend approaching that, Ryan?
Yeah, that's a good question. Let's see. I mean, at the end of the day, you are responsible for the activity, being the sponsor of the BaaS program. So whoever does end up doing it, whether it's the BaaS solution or you, that's kind of up to your arrangement as to who you decide you want to have doing that. End of the day, though, whatever the solution is needs to match the minimum requirements that you have at the institution for fraud monitoring. So if you have a fraud monitoring solution and minimum requirements for monitoring ACH that's produced at your institution, the BaaS provider needs to have at least that same minimum. And it's probably going to look a little bit different if you just blanket say, here's my bank solution, here's my BaaS solution, and there's no difference in how that's tuned. And the BaaS might be highly specific to some area. That's probably going to get a little bit of scrutiny, just because you should be kind of tailoring this to what the activity profile is, what the risk is.
Excellent. Yeah, when you're dealing with BaaS, you don't want anything fishy. Am I right, guys? A little knee slapper there. All right, another question that we had come in. We originate very little, but we do receive a lot. Do we need two completely separate monitoring setups, or could we maybe just do receiving?
You definitely don't need two separate monitoring setups. Theoretically, if you have a solution you want to deploy, you want to do that on the receiving side, and then the originator side, you want to do manually. If it's appropriate for the level of risk that your institution actually has, then that could work. I can't speak specifically to the scenario, not having more information on it, but if your volume is super low on the originating side, you might not need a solution for that. Maybe it's the receiving side that you want to focus on. So that's really going to be context dependent. Happy to weigh in if you want to shoot me an email about it.
Excellent. And we will be putting Ryan's email and all of our contact info up at the very end here. So definitely keep an eye out for that. We did have a question coming in from somebody that is planning to do a manual process, but they're concerned about getting overwhelmed. So is it appropriate to determine a threshold for amounts on those items that they're monitoring, or are they expected to be monitoring all of the transactions that come in?
Yeah, that's a good question. I mean, on the originator side, we know that that you can kind of do this in a portfolio basis. For thresholds on transactions that are being received, I think that makes sense a lot of times. If you are trying to look at every single transaction, you're getting down to say like 10, 20, $30. There are scenarios where if you have something automated and you can look at that, great. But if you're going to get inundated with that, it's going to make it impossible for you to look at anything. And so if you start to scope those to, it's more likely that I'm going to find fraud if I'm above this threshold. I've seen that that's majority of fraud that is occurring for my customers. Then I think those thresholds are totally reasonable. And we use thresholds all over the place to try and hone that stuff in. Otherwise, you're typically just getting a lot of noise.
Excellent. We did have a couple of questions about specific thresholds if their guidance is provided, but I know at the end of the day, it's risk-based. So are folks just able to kind of set whatever thresholds make the most sense for their institution, or do you have any guidance on how to go about that?
Yeah, it's definitely going to be specific to your institution. It's probably even specific to types of accounts when you start to drill down into it even more. If I have a portfolio that's like high dollar originators or high dollar receivers, and my threshold is $200, they're never going to fall below that. But if I have a portfolio that's primarily low dollar amounts, and then I set my threshold at $1,000, that might also be incorrect because the majority of my activity happens below that. So I'd look at a distribution of what your activity actually is. Then I'd look at scenarios where we've identified fraud in the past. What have those dollar thresholds been? What have been the most impactful ones? And if you could have stopped those earlier, maybe it would have been easier to identify if you had a threshold of X. So just kind of look at what's happened historically. Even if it's not the same exact scenarios, just look at what is the pattern of fraud that you typically see.
Excellent. We had a question that says, do we have any insights into what specific aspects examiners have cared about the most for the banks that have been live since March? Can you speak to that at all, Ryan?
Yeah, I haven't heard anything to this point. I think it's probably still a little bit early. And even when you're looking at this, it's a question of who's even the appropriate examiner or regulatory authority that should be reviewing these sort of things. So it's probably going to be, I'd guess, at least another 3 to 6 months before we start to hear like real solid feedback from any regulatory agencies about what's working well, what's not working, what are gaps, what are areas that could be enhanced. Excellent. But I do expect them to be relatively collaborative with people, given the kind of guidelines here are a little bit nebulous, and it's a difficult implementation with a lot of changes.
Well said. Excellent. Yeah, so I know we'll be keeping our eye out for any of those more concrete examiner feedback items, and we'll be sure to share those with y'all as they come to light. So a great question there, maybe just a little early. Let's see, we had one about right sizing their monitoring team. So any advice for right sizing our monitoring team to keep up with alert volumes if we want to monitor in real time? They don't want to miss any fraud, but they also don't want to overstaff or use too many resources unnecessarily. Any recommendations?
Yeah, I'd say first thing is just tuning. Make sure this stuff is tuned well over time. Like if you're turning on every scenario that you might have at the same time, that's probably going to inundate you because one, you'll be getting too many alerts to go back and actually tune it to reduce the quantity of alerts you have. So pick a couple of the scenarios that you're starting with, tune those, move to the next couple, tune those, but really try and hone that in. And then in terms of right sizing, that is tough. I don't know if you can cross-train people in different departments that maybe they can pick up some of the slack while you figure out if it's actually something you need full-time staff for or not. If there's at least, it's a tough decision because it's going to be really dependent per institution. But I'd say cross-training is probably one of the safest places you can go there. If you have different staff that you can pull in for variations in the amount of volume you're seeing, that's something I've seen as being the most effective in institutions I used to regulate.
Yeah, well said. And Ryan, I think you mentioned this as well. Examiners are likely not looking for perfection on day one. So if you need to ramp up a little bit and maybe you find out that you're understaffed in your first month and then you adjust accordingly, as long as those things are documented and you're making your intentional best effort there, that's always a great avenue. I know we got some more questions that have come in here. A lot of those are a little bit more in-depth or hyper-specific. So as always, we'll follow up with those folks individually after today's call. But I do want to make sure that y'all have our contact information, know how to get in touch with us if those questions are coming up as we're going. Of course, our objective is always to take the BS out of BSA. We're doing that across the board via in fraud, in transaction monitoring, and hopefully just making y'all's jobs a little bit easier, a few less clicks to get the work done that you need to. So if you do have any final questions, thoughts, comments, or want more resources, this is the best way to get in touch with us. I do want to give a huge thank you to Ryan for sharing his expertise with us, saying it's a huge amount of work to not only put these kind of presentations together, but to build out a whole solution that can make all of this happen is an understatement. So big thank you to Ryan on that. And then definitely for all of our attendees here today, be sure to keep an eye on your inbox. We'll be sending out the recording of today's session, the slide deck, a checklist that you can make sure you're up to date with. All of those resources and more will be in that email hitting your inbox first thing tomorrow morning. We do also have a brief survey that will follow the webinar as you close it out, where you can give us some feedback on how we did, maybe recommend topics for future webinars, or ask to get in touch with us. So please take a moment to share your thoughts there. If you do have any additional questions, If you want to learn more about RiskScout, or if you just miss Ryan's face and you want to say hi, you can always find us at riskscout.com. Ryan, do you have any final closing thoughts here before we wave goodbye?
Just thank you everyone for taking the time, and good luck as you start to go through some of the implementations here. And if you have any questions or anything, please feel free to reach out.
Excellent. Well said. Thank you all. Enjoy the rest of your day, and best of luck handling these new Nacha rules. We appreciate you.